Welcome back, guys, to another episode of 5 Minute DD. Today we're talking about QYLD, the Global X Nasdaq 100 Covered Call ETF. For those that are new to my channel, this is where I do some due diligence on a stock. I found out everything I'd want to know before purchasing, and I throw it all into a video for you guys. I try to keep it around 5 minutes. That's why I have to talk really fast, because there's a lot of information about these stocks that I want you guys to know about. So I do own QYLD. I'll say that right now. I do like it, but that's not financial advice. I want you guys to do your own research after this video and let me know what you guys think in the comments on if you would buy this stock or not. Now, if you guys are new, I'd appreciate if you guys like this. It really helps out the video algorithm, as well as comment if you want me to do a 5-minute DD video on a stock of your choice. I love doing viewer recommended stocks. And then subscribe if you're interested. I do put out about 3 to 4 videos a week, all around this topic on stocks, on financial coaching, on a number of different things. So we're going to jump right into the pros. QYLD has a really nice, almost 13% dividend yield, 12.85%. Now, dividend yield is one of the most important things when you're looking at a covered call ETF, because that's where most of your money is going to come from. These types of funds are not made for price appreciation. That's why you have larger tech stocks and overall ETFs that don't do covered calls, because they're more growth based. So these ones, it's really important to have a higher yield, in my opinion. It could make it a little bit riskier. But if you don't have a covered call ETF with like a 6 to 8% yield at least, you're almost missing out on the overall return of the market, because if SPY is returning 8 to 10%, you might as well put that money in SPY and get a little bit of dividends with the price appreciation. So price appreciation is one thing that's important with the covered call ETFs, but you can't really expect it. I say it's important because I don't think you should be buying these if they are dropping in price appreciation quickly and over a long period of time with no bounce backs and no dividend increases. Next, let's talk about the monthly distributions. They've gone for 9 straight years. Now that is really impressive. They have been a public fund, let's check, since 2013. Now this chart is really ugly. They were doing really well and just started taking an absolute beating. Now, the reason I still like QYLD's chart is, like I said, I don't like buying ones that are down long term, but they were doing extremely well until this downturn in the market. And that is largely due to the fact that this has been the worst bear market that this stock has ever seen. So it's not saying that there isn't bounce back potential. There is, and you still would get some nice dividends out of that. But the reason this thing has been downtrending, it wasn't really downtrending the first 5-6 years, and then just how the market has been doing, it's been dropping like crazy. So the higher yields during times of market volatility. Now that's from their investor relations portion of their website, which I do like to look at. I recommend you guys look at that too. I will link it in the description below. So basically what they're saying is that covered call ETFs do really well in times of volatility in the market and times when the market is trading sideways. So if the market is trading within a certain parameter, and they've been trading kind of sideways for like a couple months or even a couple years, these will outperform SPY during that time, a number of other ETFs, because the dividend yield is so high. And so even though you may be losing some price appreciation and not getting as much price appreciation as you would with just typical stocks, you're still getting a high dividend yield. The expense ratio, it's in the pros section. This is, or the pros category, I should say, because it is typical. 60% I think is average. So it's right in the middle of what these funds are typically charging. So not too bad. Not great, but not too bad. I would love it if it was a little bit lower, but QYLD does have an insane dividend yield. So you have to take some of that into, you have to realize that when you're buying into this. The growing popularity of covered call ETFs. I don't know about you guys, but I didn't discover covered call ETFs until about a year and a half ago. That's when I really started diving in and finding the ones that I really like, seeing how well they pay out in the times when the market just trades sideways. And so I've been seeing it blowing up all over social media as well. Tickers like JEPI, JEPQ, absolutely extremely popular, and money is flooding into those funds. So I think that it is important. Some of those are a little bit newer, which might make it so it might be more competitive than QYLD and XYLD because they are a little bit older. But I think in time people will want to spread their money out between different covered call ETFs and not put everything into JEPI. They would probably want to diversify a little bit, just like I do. So their top holdings, we see this a lot with different covered call ETFs that are covering the NASDAQ: Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Broadband, Pepsi. It's a good mix. They do hold a lot of money. I believe it's 14 million. We can actually check that. Of their assets, 6.74 billion. So a really good amount of money. And the nice thing with these covered call ETFs is the more money they have, the more calls they can write. That's the more dividends they can pay out. That's a very important thing to note. And then looking back at their since inception, they are down since the inception of the fund. I believe this is talking about, yes, with cumulative would be, I believe, with the dividends reinvested. So you'd be up 64%, and the actual fund is down, or up, they have it being up about 5%, but it's not. We can see that on the QYLD stock. It's down about 32%. So very impressive if you reinvest dividends, and that's kind of the point of these, especially when the market gets bad and these continue to drop for a period of time, and you can reinvest those dividends when the price is lower, getting a better yield. That's what I love to do with these. That's why I usually have reinvest dividends on, except for some of the more risky dividend ETFs that I have. Now we'll talk about the cons. The max chart, it's ugly. You know, it is beaten down. Another con that I don't really talk about, it's kind of tough with, oh no, it's right here, inconsistent dividends. So you're having dividends that come and go at different rates. You never really know what you're going to get, and a lot of it depends on the price of the fund at the time. So it can be hard to predict exactly how many dividends you're going to get. You're going based off that yield, but with the price falling, you have to keep an eye out on these and make sure that it's still giving you enough income that you would like and isn't being outmatched by another fund, which is the growing competition, which is the last con. Because with funds like JEPQ is an interesting one because they just jumped their dividend like crazy, and it's only been like 6 months of them paying a dividend. But if you look back at JEPI, it's been paying for like 2 years, and the dividend took off from the beginning. So people are buying into JEPQ pretty heavily, and JEPI as well. So QYLD has some really strong points. I do own this, like I said. This is not financial advice. It's just a fund that I like because that monthly income is great. I'm looking to expand my portfolio between the number of stocks and the amount I have in there as well. So I'll be doing that all through 2023. I'll probably do some update videos on that. That being said, if you guys like the video, please like the video. That helps me a bunch. Drop a comment, drop a subscription if you are interested in this type of content. I love doing viewer requested videos, so don't be shy about that. Even if a stock's not good, I'll just tell you I don't like it, and that's just my opinion. You can, of course, follow your own research with these stocks. So that being said, thank you guys for watching the video up to this point. I appreciate you guys. We're already to like almost 130 subs, which is pretty crazy. I've been working hard at this channel for about a month and a half, and it's been growing like wildfire, which has me pumped. So as again, not financial advice. I appreciate you guys. Have a good day.